Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for joining us today.
Good afternoon.
Well, the U.S. markets were closed on Monday for President's Day, though with the Ukraine situation now more acute, the futures are down pretty sharply. Elsewhere, European stocks were down quite a great deal on Monday in the 2% range. What's the story in the global markets?
Yes, the Russian President Putin recognized two breakaway regions in eastern Ukraine as independent on Monday and ordered the Russian army to launch what Moscow called a peacekeeping operation into the area. This is pretty much accelerating the crisis. Whether the West will fear that as the unleashing of a major war. Now, if you look at the this military action, we're not immediately clear by the West as a start of an invasion of Ukraine by Russia. That United States and its allies been warning about this for the weeks since the area was already controlled by the Russian-backed separatists and Moscow in practice. Pretty much this is causing European Union as well as the U.S. Will be coming out with the possibility of sanctions against Russia. That is causing the overall market to be very, very volatile. European market sharply fell on Monday. DAX was down by more than 2%, and most of the European markets were down by 2%. And the Russian equity market actually was down by 13%, and also the futures market was down by 17%. So this has been a quite significant uncertainty, and that is causing globally overall market to be fairly volatile and continue to be worried about whether the full-scale war will be breaking out in that area. However, though, given the fact that this is a bit of more of the military action without actual, really fight over the region, it is more of a separatist movement where the Russia is kind of basically, moving into saying that this is a peacekeeping exercises. All in all, in any case, this is causing overall financial market to be volatile, and the safe haven areas such as gold and also the areas such as the natural gas and the oil prices all get affected because of this kind of uncertainty that we are seeing right now.
Right, and the Ukraine issue is a big factor that weighed on Korean stocks today. Seems a lot of people think we could be heading lower in the near term, especially on the risk of actual armed conflict. Then again, that risk could already be priced in. Retail investors today, though, apparently saw a chance to buy. What do you see happening in the domestic market?
Yes, if you look at the Kospi, it was down by 1.35%, and Kosdaq was down by about 1.83%. It seems that the foreign investors are the one major selling. If you look at the foreign investors, they sold $326 billion today, and also institutional investors sold about $382 billion, while the retail investors are the only one that was buying a total amount of about $672 billion. Overall, we are quite concerned about this uncertainty of Ukraine issue. This affects economically in a sense that if the oil price continues to remain very high, above $90 per barrel, now has reached already 93.5. Obviously, that causes the energy prices to be much more expensive for Korea. Korea is heavily dependent on oil prices, given the fact that we are very manufacturing focused, and energy cost is very important. The $10 per barrel oil increases affects the GDP to fall by 0.4% or so. Clearly, this is quite negative news if this kind of lingers. The problem here is that this uncertainty is not going to be going away immediately. It's going to cause quite a bit of uncertainty for the time being, and maybe there might be some kind of economic sanction happening, and the natural gas flow to Europe might not be happening. All that it will be causing a lot of the raw material costs to rise quite a bit, and it's been already rising quite heavily. So obviously, Korea, who are major manufacturers of world, obviously get affected because of the cost of goods will be rising. So we will have to watch and see how this problem gets solved Whether this will be a quick solve or it's going to take many, many days, that's a question mark. We will wait and see. In overall, unless that uncertainty goes away, obviously Korean market will be very volatile. One good thing, though, is that on the valuation basis, at 2,700 KOSPI and 870 KOSDAQ, that applies, it's looking at pretty much a worst-case scenario. So valuation-wise, it is cheap, so it's not going to be going down significantly more. It's just that it will be very volatile at current stage.
Well, something you mentioned before, these geopolitical tensions are sending the price of gold higher as a safe haven. There's talk of gold rising to over $2,000 an ounce and reaching new highs. Tell us where you see gold going in the near term and perhaps a little farther out.
Yes, if you look at the gold prices, now it is hitting $1,910 per ounce. It's been rising by about 5% since the beginning of this year. Based on our Black Little models, we are looking at gold to be the one area that we need to own somewhere between 4 to 7% of total market investment, which is quite sizable. And if you look at the oil prices, on the technical basis, people are saying that this will break clearly $2,000 per ounce. It might be rising to as high as 2,700. All in all, everybody seems to be looking at this as a precious metal as well as the safety haven type of investment. We think that gold is in a 5-year cycle of upward trend. It's been, pretty much weak for over 1 year or so. Now it's back to start to rise again. Not just the gold, but various precious metals will be showing rising trend on back of this Russia-Ukraine crisis.
Well, finally, Mr. Yu, the spread of the Omicron variant here in Korea, now with new case numbers hitting 6 digits. Consumer sentiment is down for this month, though interestingly the index is still above 100, so there's a slight degree of optimism about the economy. What do these numbers indicate, in your view, about the economy?
Yes, the Composite Consumer Sentiment Index, CCSI, in South Korea decreased by 1.3 points to 103.1 in February of 2022. This is the lowest since the August of last year. Households were less optimistic about the current state of the economy and the future domestic economic conditions. There were also a deterioration regarding the current living standard, current household income, and the future household income. So obviously, clearly, this has been uncertain. However, though, we did see a budget passing for further support from the fiscal side. We think that the people might be feeling a bit better. However, though, with this kind of the oil price rise and energy price rising, and also uncertainty in the Ukraine area, people might be feeling a bit more uncomfortable in the future. All in all, however, though, fundamental-wise, overall export numbers looks good. Economic condition in terms of manufacturing side looks good. It's just that the raw material cost rise might be affecting a bit more significantly. But all in all, we think that the consumer sentiment index will remain well above 100 for the time being at least. And we'll have to watch and see how long this kind of oil price rise will remain to be at current stage.
All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you very much.